Shares in Chinese property developer Country Garden rose as much as 20% on Monday after creditors agreed to restructure a $540 million bond repayment that was due over the weekend. That's also given a much-needed boost to other real estate companies, which the Seng Mainland property index up around 10%. Country Garden stock is still down more than 60% in the year to date. It missed interest payments of $22 million on $2 bonds last month, triggering a broad sell-off in shares of property groups already under pressure from widespread defaults. Chinese authorities finally stepped in last week to lower down payment requirements nationwide for first-time and second-time buyers in a bid to spur the property market. Let's get more on this now with Josh Mahoney in London. He's Chief Market Analyst at Scope Markets. Hi there, Josh. Finally, some good news for China's beleaguered property sector. But will this have any long-lasting effects?
Yeah, certainly. By no means has this issue been resolved. The decision to essentially extend the period of time provided to Country Garden to be able to make their payments does, for the time being, stave off that default risk. But it doesn't necessarily change the position that they're in. And this is in a similar position that we've seen for many of the companies within the sector. Essentially, they've taken on huge loans for a country that has been growing at a rapid clip. And now things are slowing down. They don't necessarily have the demand, and they need to keep bringing in this demand to be able to pay off their previous debts. So unless the government can somehow prop up the real estate market and try and get enough buyers back in to stimulate the demand, to get the money into these companies for them to be able to pay off the debt, then they're going to be in this position for some time. So all eyes will be on the real estate market to see exactly how the stimulus measures from the government are going to impact. So far, we have been seeing an uptick in terms of interest for buying, but quite how long that uptick is going to last, that really remains to be seen.
Right. Beijing stepped up measures to boost the economy last week. Can we expect to see a recovery in the world's second largest economy anytime soon?
Yeah, I think the Chinese government is in an interesting position. At the moment, it looks like they're just trying to inflate the real estate market once again. And that's because China is overly reliant on the real estate market. It accounts for around about a quarter of their GDP. Ultimately, what they need is to inflate the entire economy, because we've seen deflation over in China. We're seeing consumption levels not at the levels that they required, because they wanted domestic consumption to be the driver of growth. And the problem is there's so much money tied up in real estate that if that sector continues to go down, then it's not going to be great for the Chinese economy as a whole. So they're sort of trying to stick a plaster on it for the time being. But what they need is stability going forward. And they're transitioning from a period of massive growth in terms of real estate to one where they want stability, and they don't want defaults and administrations and things like that. So it's going to be a difficult tightrope for them. And I think it's ultimately going to lead to them growing at a slower clip going forward. And quite what that journey is going to be to get to the point where they're stable once again, we don't necessarily know. I think it's going to be a rocky time. I think it's quite a difficult one to judge. And I don't necessarily think that this is the beginning of the end per se.
Right, Josh Mahoney there in London. Thank you as always. Now to other top business stories from around the world. Turkey's exporters have achieved their best August sales despite the impact of a global economic downturn. Shipments abroad rose 1.6% from a year ago, reaching $21.6 billion. Imports also fell by 6.3% to $30.4 billion during the period, resulting in a 21% decline in the foreign trade deficit. The United Arab Emirates has established a federal body to regulate the gaming sector, a decision that will legalize gambling in the country. The new authority will introduce a regulatory framework for a national lottery. It comes a month after Wynn Resort said it expects to obtain a gaming license to run its casino in the country, costing $3.9 billion to build. And French cosmetics brand L'Occitane has halted trading in Hong Kong ahead of an announcement of a possible take-private deal. The publicly listed company will go private for a minimum offer of $3.31 per share, delisting itself from the Hong Kong Stock Exchange. L'Occitane raised $787 million in the company's 2010 initial public offering.